You're watching Silver News Daily. Subscribe for more.
The lifeblood of the system, which is debt, all of it is going to lock up. That means transactions stop. It means you go to your bank, there's no cash in your brokerage accounts, there's nothing, the system dies.
It starts with a whisper, an unusual glitch at your bank app. Then your card gets declined. The ATM's down, your brokerage won't load. In the span of hours, everything locks. No access to cash, no ability to trade, no system to rely on. What you're witnessing isn't a bug, it's the crash we've been warned about. Gregory Mannarino calls it the total lockup, the moment when the global debt bubble finally bursts and triggers an unstoppable domino collapse. In this scenario, it's not stocks or crypto that save you. It's not gold either. It's silver, real, physical, untouchable silver, exploding past $100, past $500, and yes, potentially screaming toward $1,000 an ounce as the financial system eats itself alive. Sound extreme? Not if you've been watching the signs. The U.S. debt's out of control. BRICS are dumping dollars, inflation's outpacing wages, and central banks? They're trapped in a corner, printing recklessly just to stay afloat. If the world's largest economy is one downgrade away from junk status, what happens when confidence breaks completely? Stay with me, because in the next few minutes, you're going to see exactly how this meltdown could unfold, why silver is positioned to benefit more than any other asset, and why waiting could cost you everything.
Well, oh man, where do I even start with all this? I mean, we could look at, that downgrade. It's, man, I think everyone knew it was coming here. Yes, indeed, it's symbolic more than anything else, really. We've all known about this. The U.S. issues with regard to debt expansion and everything that is derived from it, being the markets across the board as well, the unfortunate downfall of the United States of America on the global stage, the fact that we will lose in the process of right now our reserve status with regard to the currency and everything connected to it. But basically, to me, look, this is symbolic. It tells us something that we already know, that we are in a downward spiral. It's irrecoverable. There is no way to fix it with any of the current policies in effect. Could we turn this around? Yes, we could. But we need to start with one basic factor, and that would be returning purchasing power to the currency. And that's not what we're getting. We're hearing more and more talk about how we need lower rates. We need a weaker currency here, and the central bank's in a race to the bottom. We all know that collectively. It's an amazing thing to witness. And people are sitting by, idly by, except for the people that follow our work, of course, and they can't believe what they're seeing. I mean, people are just, what has happened to the population, I don't know. They have been so distracted, deceived on every level that you can dream about, and they think that things are okay, but they're not. This debt downgrade, again, being symbolic, this is, again, most people, it's happened before, but that's not actually true. Yes, we did lose. We've been downgraded before, but this is the first time ever we lost the AAA rating, and that is symbolic here. And now what this really means, what does it mean? Okay, Greg, well, what does it mean? It means that the debt here, even U.S. debt, is no longer safe anymore. And then we got this whole other issue of corporate debt, which is out of control right now. And this is another time bomb underneath the system. It's going to go off. We're already seeing what's happening here with regard to corporations here and the spreads here in
the debt market is cracking at its core, and most people have no idea what that really means. For decades, the global financial system has depended on one simple truth, that sovereign debt, especially U.S. Treasuries, is the safest asset on earth. But not anymore. When Fitch downgraded U.S. debt, it wasn't just a symbolic move. It was a shot across the bow. The last pillar of global financial confidence is shaking. Gregory Mannarino puts it plainly, this isn't just a downgrade, it's an admission that U.S. debt is no longer safe. That changes everything. Because if the foundation of the system is no longer solid, every asset built on top of it, stocks, bonds, real estate, even cash, becomes suspect. We're not just talking about high debt. We're talking about debt that is growing exponentially. Projections show U.S. debt hitting $60 trillion in under a decade, and that's a conservative estimate. The real number could be much higher. And here's where it gets dangerous. Debt isn't just a number on a screen. It's a promise that it will be repaid. But when debt becomes unpayable, promises are broken, trust evaporates, and markets panic. That's when the run begins. Banks dump treasuries, yields spike, the Fed intervenes, and we spiral closer to total collapse. This is exactly why silver becomes so critical in moments like these. When trust in paper assets disintegrates, investors turn to something real. Historically, every time sovereign debt loses credibility, precious metals surge. In 2011, as the U.S. flirted with default and Europe teetered on the edge, silver shot toward $50. Now, with the scale of this debt crisis orders of magnitude larger, silver's upside isn't just $50. It could be hundreds more. The cracks are already visible. What comes next will determine everything.
The debt junk bond market, this is getting wider. This is a clear sign that there's something going on here under the surface, obviously, and it all ties completely and perfectly together. So unfortunately, what we're going to see is this. Every excuse imaginable and things we can't dream about. Does this sound familiar? Of course it does. You and I have spoken about this a million times. To continue to inflate, even though we just got this debt down here. We got this Iron Dome, Golden Dome thing that President Trump's talking about now. Okay, we need this for our security. It's for our freedom. All this does here is stifle us even more. It has nothing to do with any of it. But this is how it's sold to us all to allow the debt to inflate even more. I just ran across a projection here, and this is a conservative projection that 10 years, no, 9 years from right now, the U.S. debt is going to be near 60 trillion by their own numbers. Now, we know it's going to be much higher than that. That's assuming a 5% growth rate, 5 in the debt and deficits. And it's going to be way beyond that, of course. So we can't survive this here. We're being deliberately driven into the ground like a pile driver. The market is still in la-la land. I mean, as we're speaking, as the stock market's under pressure, it's trading on multiples that are astro-freaking-nomical, and this has been going on for quite a while. People are willing to pay almost anything still to own shares of stock. You got to be out of your mind. This is going to stop. This is going to contract so fast, this multiple expansion cycle that we've been in, so fast that people's heads are going to spin around. They're not even going to know what to do with themselves. But again, it's always the same story. And we're just witnessing things kind of repeat themselves in some ways. But we've never been here before. This is where no man, no woman has gone before with regard to the global financial system. And we are witnessing, again, a symbolic event, which is going to precipitate to making it very real for people at one point. And I'm talking about this goes way, way beyond the markets. The markets, look, people like to play in them. I'm one of them. We like to study it. I'm fascinated by the movement of cash through the markets, through the economy, how it works, what governments do to prop it up, central banks, who pulls the strings, the puppeteers, all of it. It's fascinating to me. But, and I think, look, man, we're preaching to the choir. There's no doubt about it. But the issue here with regard to global debt, currency devaluation, debasement on the back of artificially suppressed rates is epic. Epic. What's happening here is, what are they doing? We have world leaders, every single one of them. What are they doing? They're protecting the banks. They're protecting the banks and they're putting it on us. So protect the banks and make the people suffer by doing so. Pretty much that's it.
As trust in debt erodes, the next domino is the currency itself. Because when investors realize the promises behind the bonds can't be kept, they start asking a much darker question. What is the dollar even worth? The global financial system is built on the belief that the U.S. dollar is the ultimate reserve currency. But that belief is fading fast. BRICS nations are already making their move, ditching dollars in trade, stockpiling gold, and setting up alternative payment systems designed to bypass the Western banking structure altogether. These aren't fringe moves. These are calculated acts of preparation for a post-dollar world. And it's not just geopolitical shifts. The dollar is being destroyed from within. Every stimulus check, every bailout, every new spending bill adds more to the supply of currency without adding any real value behind it. The result? Your dollar buys less and less each year, even if official inflation numbers are massaged to hide the truth. Gregory Mannarino makes the case clear. Central banks aren't interested in preserving purchasing power. They're interested in control. And the only way they maintain control of a failing system is by inflating the currency until it breaks. This is where silver's dual nature becomes a weapon. It's not just a monetary hedge, it's also a physical industrial metal with intrinsic value. So as the dollar loses its reserve status and fiat currencies come under attack globally, silver offers what no printed money can: permanence. A unit of silver today will still be a unit of silver tomorrow, no matter what central banks decide. That's why, when faith in currency collapses, silver doesn't just rise. It explodes. Because it's not just a safe haven. It becomes the new standard for what's real.
Well, let's talk about it. I mean, it's just, look, some things really are so obvious that I mean, I almost feel like someone's punching me in the face when these things just kind of hit us all. And I think, again, we're preaching to the choir, but what's going on? What we're seeing, just this morning, we find out the inflation in the UK unexpectedly jumped. It's always unexpected. Here's another one. Here's a headline here. Food prices are rising. Just listen to this. I'm just reading this. This is not Greg Mannarino. Consumers are beginning to experience tariff-related sticker shock. It's not just about tariffs here, okay? This is about currency devaluation on the back of artificially suppressed rates. Tariffs are definitely a hidden tax, no doubt about it. But this is a deception in some ways here. It really should be saying here a combination of currency devaluation, but it's not. Let's read more. The average cost of food is up compared with the same period last year. I mean, really, honestly, we need someone to tell us this. And how about this one? As a percentage of overall income, again, this isn't me, this is an article I'm reading here. This is on Market Watch. The amount spent on groceries continues to rise. Now, this is what bothers me more so than everything else. Consumers are scaling back on healthy foods, opting for cheaper alternatives. So people are now poisoning themselves because they have no choice. They got to buy the poison instead of the good food. Do people not see? They can't see what's going on here. But and again, going back to what we were just talking about, here's the issue. Inflation is rising everywhere. How do we stop it? We need a stronger currency. Does that make sense to a single person here listening? Of course. It makes sense to every single person that's listening to this because it's the truth and people know the truth when they hear it. How do we return purchasing power to the currency? Many, many ways. We know we're not going to go back to a gold standard. Okay? President Trump could end the Fed today, instituting the Gold Reserve Act of 1934. Today, goodbye. See you later. Back the currency with the gold, value it whatever he wants. Ain't going to happen.
Inflation isn't just rising, it's metastasizing. And it's no longer confined to grocery bills or gas stations. It's baked into every corner of the economy, and it's accelerating at a pace central banks can't control. Gregory Mannarino doesn't mince words. The system itself is designed to create inflation. It's not a bug, it's a feature. Because every dollar printed dilutes the value of the dollars already in existence, and the more they print, the poorer the average person becomes. That's why food prices are surging, rent is unaffordable, and wages can't keep up. But here's the kicker. Central banks know exactly what they're doing. They talk about fighting inflation with higher interest rates. But those hikes are token gestures. Why? Because raising rates too far would crash the entire system. The banks, the corporations, the government, they all depend on cheap debt to survive. So instead, we get the illusion of action. While behind the scenes, money creation continues unchecked. And this money doesn't flow to you. It flows to the top, fueling asset bubbles, widening inequality, and transferring wealth from the middle class to the elite. Meanwhile, silver sits in the shadows, quietly waiting. Inflation eats away at the value of fiat currencies, but it only strengthens the case for hard assets. Silver doesn't yield, it doesn't pay interest. But in a world where real interest rates are negative, where your savings are guaranteed to lose value, owning something that can't be printed becomes a financial survival tool. And unlike fiat, silver has never gone to zero. In times of monetary decay, it becomes not just an investment, but a lifeline. And with inflation now global and central banks trapped in their own web of policies, that lifeline is becoming more valuable by the day.
We're hearing the guy out of his own mouth and everybody else, every single world leader, same thing. No one's pushing back against central banks lowering rates artificially here and killing their currency. So let's put this into perspective. We understand that we need to return purchasing power to the currency. Sound about right? We could do this by raising rates. If people don't believe what I'm about to say, I'm going to urge them to look this up for themselves. Period. Higher rates and a strong currency are the builders of economies. Low rates and currency purchasing power losses are the wrecking machine of the economies of the world. We have been more prosperous in the United States and around the world when we've had higher rates and a stronger currency. The current situation just wipes us out. Wealth gets stolen right out of the middle class, right out of the economy, shoved right up to the 1% and 2%. That's how it works. So when you hear a politician say, hey, you know what, we need lower rates or we need a weak currency, you realize that they're working for their central bank. So here's the thing. We need higher rates around the world. We're not hearing a single world leader say that. Why? Higher rates would hurt the banks. It would hurt the central banks. Okay, that's not going to be allowed here. So instead, we're going to get lower lower rates, and we're going to see more lower rates here moving forward in the United States as well, this destroys we the people. So we get destroyed, the banks get to survive, and they get to inflate. Again, the most basic principle that people do not understand is, how does a central bank lower rates? When, let's say tomorrow, the Fed comes out and says, you know what? President Trump is right. We need to lower rates right now and therefore destroy purchasing power of the currency. The Fed has to get into the market. They can't just say it. They can't wave a magic wand. They have to create the currency out of nothing, buy the debt, and by both of these things are currency purchasing power negative. But no politician can tell you that, and most people have no idea how it works, but that's the basic principle of it. So the banks are being protected because, again, we need higher rates. Not going to happen, because that would hurt the banks. That would hurt the central banks. That's it's basically obvious, right? So what are they going to do? They're going to lower rates, kill the purchasing power of the currency via that mechanism here, and we lose. It's too simple to understand. This is basic economics and finance. But again, it seems like every single world leader doesn't get it. Really, honestly, they don't understand that. But obviously they do. So there's a much darker thing going on here.
Central banks are caught in a trap of their own making. Raise interest rates too high and the banking system collapses under the weight of unpayable debt. Keep them too low and inflation burns the economy from the inside out. There is no exit, no clean solution, and no hero coming to fix it. Gregory Mannarino calls it what it is, a wrecking machine disguised as monetary policy. And the reality is this: central banks are not trying to fix the problem. They are managing its decline. Look around. The Fed talks tough on inflation, but what are they actually doing? Quiet interventions in bond markets, liquidity injections when no one's looking, temporary facilities to paper over insolvency. Behind every press conference is a desperate effort to maintain the illusion of stability. But investors are starting to see through the charade. They know that higher rates expose the rot at the core of the system, banks holding massive losses on long-duration assets, governments spending recklessly, corporations buried under leverage. And that's why higher rates won't last. They can't. When rates eventually fall again, not because inflation is under control, but because the system is breaking, silver stands to benefit more than anything else. Why? Because lower rates mean cheaper money. And cheaper money means more currency creation, more inflation, and more destruction of fiat purchasing power. It's a cycle, one that leads straight to precious metals. Silver doesn't rely on central bank credibility. It thrives when that credibility collapses. And the next policy pivot, when it comes, could be the trigger that sends silver vaulting toward the levels we're talking about today. $1,000 silver sounds inane until you realize the alternative is trusting a system that's already failed.
Whole entire system, let me see if I could find the right words here, is believing that somehow inflating more debt is going to be the savior of the system. Henceforth, while you hear a person like President Trump, and I'm not condemning the man, I'm telling you what came out of his mouth, and it keeps coming out of his mouth, that we need to lower rates here and therefore, again, kill the dollar. He's got enough guts, and I will give him credit for saying this. He comes out all the time and says we need a weaker currency. I can't believe that people don't take to the streets when they hear that they're already suffering. Again, food prices here skyrocketing. Consumers are now scaling back on healthy foods and eating the garbage because they have no choice. Because they have no choice anymore. People can't survive. So we have a suspended animation. Exactly what you're talking about here. Wile E. Coyote frozen in midair. Everything is kind of frozen right now. And this should tell us something, that we are at the precipice of this. And it's going to get extremely real. It's not just about the real estate markets, commercial real estate markets, stock markets, debt markets, or anything else. It's about what's going to happen to we, the people of this world, who are being pressured, who are being erased, who are being eliminated via this process by governments that have gone completely wild drunk on debt. And believing and trying to sell we, the people of this world, even our own president, not calling him out for those that, again, get sensitive here, out of his own mouth, we need lower rates, we need a weaker dollar. Okay, how does that help you? It doesn't. Greg, we need low rates so we can borrow weaker dollars and pay them back with even more weaker dollars? Oh, that really works fantastic. No, it doesn't. We already have historically low rates. It doesn't work. This is, again, trickle-down economics and finance, which is the most destructive force for the middle class in the history of the world. Okay, we need to build it from here. We need to empower the people. How do we do that? It's so simple. Just return purchasing power to the currency. But that's not what we're hearing from a single world leader. Why? They're protecting the banks. They're protecting the financial system, the nightmare, the parasite that is sucking us all dry. That's what this is. It's a parasite. You know, I wrote a paper this morning, another one. I've been writing stuff like 2, 3 a day now, discussing what the system is. It's a parasite, and it's sucking us dry. And the more they lower rates, and the more they kill the purchasing power of the currency, the more of a parasite it becomes. I don't know, man. I can't think of another way to put it. I try to think of new words, and once in a while one hits me, like parasite. It's a parasite.
The banking system is the next domino, and it's already wobbling. Forget the headlines about record profits and stock buybacks. Underneath the surface, the financial institutions that underpin the global economy are gasping for air. Why? Because banks are deeply exposed to the very debt that's losing credibility. When bond values plunge, bank balance sheets get hammered, and when confidence falters, it doesn't take a full-blown collapse, just the fear of one, to spark a run. Gregory Mannarino lays it out in brutal terms. The banks will be protected, but not in the way you think. World leaders aren't rescuing depositors, they're rescuing themselves. The playbook is simple. Socialize the losses, privatize the gains. That means when things go south, it's your money, your savings, your retirement that gets vaporized, while the system is quietly backstopped behind closed doors. And here's where it gets even more dangerous. We're entering a digital age where cash is being phased out, physical currency is disappearing, and with it, your ability to escape the system. Once the next wave of banking panic hits, there won't be a line outside your local branch, because access will simply be cut off. Cards declined, ATMs offline, brokerage is locked, and if you're not already holding real assets by then, it will be too late. That's why silver isn't just a hedge, it's a form of exit. When the digital banking grid goes dark, even temporarily, only what's in your hand will matter. No third-party risk, no waiting for a bailout, no frozen accounts, just ownership. In a system this fragile, that's not just protection, it's power.
I think what you're talking about is going back to the credit default swaps here. This whole derivative issue plays right into this. Look, man, debt and debt obligations and all stuff connected to pension plans and all the stuff you were just talking about. There's no way it can be paid. There's no way. And what this is going to end up happening is look, I think it's obvious, at least it is to me, and I'm certain it's obvious to the people that follow your work. We are going to experience a crack in the sky that's going to open like like people don't even know. And this is I'm talking about the implosion here in the debt market. We already got, again, the U.S. debt has been downgraded. There's no safe debt anymore anywhere. Now, all of these things that you just alluded to here are connected to a credit default swap. In other words, risk is moved from one place. They can't get rid of risk. So they try to lessen the burden by putting that on another company. And then there's another company that takes on more, a part of that. No, it's just split up into tranches and sold off to the highest bidder. And with regard to, this is all derivatives we're talking about here. And the derivative market, again, look, Warren Buffett himself, I don't even remember what year it was. I think it was 2002. He warned that this was going to be the end. That when the derivative market implosion and stuff was going to end it all, and it is. This whole thing, and we're talking again about a credit default swap, which is a derivative in itself as well, and the derivatives on top of that. This is the most dangerous part of the entire system. Henceforth, why they're trying to keep it afloat via, killing the currency, via, no one wants to take any losses here. Everyone wants to keep this going on and on and on and on. But the bottom line is this: all we need is one default, which is going to start a domino effect around the world, and it's going to rip through the global economy so fast, it'll be an overnight event. I mean, I'm not talking about this is going to be a slow bleed.
The real estate market is supposed to be a bedrock, slow-moving, stable, immune to short-term shocks. But today, it's paralyzed. Gregory Mannarino describes it perfectly. We're in a suspended state, like Wile E. Coyote, hanging in midair after running off a cliff. Prices haven't crashed yet, but the support underneath has vanished. Inventory is piling up, deals aren't closing, and buyers are evaporating. This isn't a slowdown. It's a freeze. And it's spreading. Look at what's happening on the ground. Homes that once sold in days now sit on the market for months. In some communities, listings have skyrocketed tenfold in just 2 years. Mortgage applications have plummeted. Real estate agents are picking up side gigs as bartenders and servers just to get by. The lifeblood of the housing market, credit, is drying up. And when people can't move, can't sell, can't finance, The illusion of value collapses. That's when prices nosedive. Now think about the ripple effect. Real estate is a massive component of household wealth, retirement planning, and even local government revenue through property taxes. When it falls apart, it drags the entire economy with it. And here's the twist. This implosion won't drive money into the stock market or back into real estate. It will drive it into hard assets. Because when the most trusted investment class becomes radioactive, people don't rotate. They retreat. That retreat leads straight to silver. Not only because it's tangible, but because it's affordable, liquid, and historically overlooked. When the dust settles and wealth needs a new home, silver becomes more than an alternative. It becomes the default. And in a world where real estate has become a dead asset, silver starts to look like the only one still breathing.
We're talking about a moment in time that it's going to rock the core of the earth. All these pension plans and all these stuff that you just talked about here, it's all going to go up in flames, literally overnight, probably within hours. And it's going to put the entire world at a standstill. What I mean by that is, again, what does this all come down to? It sounds spooky and scary, but you know what? The system's going to keep on functioning? No, it won't. What we're talking about here is a locking up of the credit markets. They're going to seize the lifeblood of the system, which is debt. All of it is going to lock up. I've been warning people about this for 10 years or longer. That means transactions stop. It means you go to your bank, there's no cash. There's no cash in your brokerage accounts. There's nothing. The system dies. It's over. This is what was occurring in '08. Okay, but what did they do at that point? They rushed Bernanke in before Loving Caring representatives that are flooding, pumping billions into the system, and that got the credit markets running. Can't do it this time. It won't happen. And we are on the precipice of this thing. And it's not the freaking stinking stock market. I hate when people sit there and they stare at this freaking stock market all the time. It's the debt market. Everything is a derivative of what's occurring in the debt market. Even the entire derivatives market. All of it. It's so astronomical. It's so absolutely twisted what the potential is for this to, and I say, look, there is no way, at least now, it's as clear to me as clear can possibly be, that we will sidestep this because we're being pushed directly into it by design. Nothing we're seeing here is by accident. Now, people are going to say, oh, this is fear-mongering, this, that, and the other. Really, honestly, prove me wrong. Say one thing that I've said here that can't be verified, that's not actually true. Okay, then I'll eat my own words. Until that time, how about we go keep our mouths shut and then we actually start learning what's actually going on.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell, comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active. Corporate debt is the fuse no one's watching, and it's burning fast. While everyone's focused on sovereign defaults and banking fragility, the private sector is sitting on a mountain of liabilities that dwarfs anything we saw in 2008. Gregory Mannarino doesn't sugarcoat it. Corporate debt is a ticking time bomb, and it's already destabilizing the foundation of the entire financial system. For years, companies gorged on cheap money, issuing debt at record levels just to buy back their own stock or fund unprofitable growth. But now, those ultra-low interest rates are gone, and the rollover risk is brutal. Companies are now being forced to refinance that mountain of cheap debt at much higher interest rates. Margins are shrinking, defaults are rising, and bankruptcies are quietly creeping up. It's not making headlines yet, but that's exactly how systemic failures always start. Slowly, quietly, then all at once. And when enough corporate dominoes fall, it starts to contaminate everything. Credit markets seize up, job cuts accelerate, and consumer confidence collapses. This is where silver's unique position becomes even more valuable. Because in a corporate debt crisis, traditional investment vehicles break down, stocks crash, bonds become radioactive. Even cash loses its appeal as it becomes clear the central banks will have no choice but to step in with more currency creation to backstop the fallout. But silver? It doesn't rely on corporate solvency. It doesn't need dividends or earnings reports. It just is. An asset with no counterparty risk, no default probability, and no hidden liabilities. And when markets realize the corporate debt monster can't be contained, the flood into tangible assets will be violent. That's how silver can go from a quiet hedge to the focal point of global capital preservation. Not because it's trendy, but because it's one of the last things left that actually holds its value when everything else implodes.
All right, look, man. It's not going to insulate anything. Or what we have here is a way to protect our wealth. That's it. We have to dig much deeper than that. This isn't just about wealth. Okay, you can't take it with you when you leave this earth, and we're all gonna stand before our Maker one day. Okay, we got to come together here. We got to realize goes beyond the markets. From a financial standpoint, there's no better place to be. Okay, in Greg Mannarino's view, and I will never change from this. I have never wavered from this, than in massively suppressed assets that are real things. And I'm talking about gold, especially silver, my favorite asset of all time on this planet Earth here. Okay, we're going to see a currency debt meltdown, and cash just moves through the markets in predictable patterns. If we know, okay, that we are going to see an implosion in this debt market, is being fueled with more debt every single day, despite debt downgrades and everything else. Yeah, this new Iron Dome, Golden Dome, Trump wants to build. Where's the funding come from it? Where is it for the debts and the deficits and everything else? Comes right out of the Fed. It goes up and up and up and up. It empowers the Fed. It makes them stronger. It's going to implode. So we want to have assets where we know cash is going to move into. It's going to go into commodities, real things, period. Again, this is just from a financial standpoint, but this goes way beyond that. So yeah, that's still my take on it. It hasn't changed. It's just too simple to understand. Just think about it. It's just the most simple thing. You got an implosion in the debt market, which is going to wipe out the stock markets of the world so fast. Again, people's heads are going to spin around like The Exorcist again. Because why? Because everyone runs to the door at the same time. While cash is bleeding out of the debt market, putting pressure on the stock market, it's just going to move from one reality into another. In my opinion, it's going to go massively into commodities on a scale that people aren't going to believe. And I also believe still it's going to go into cryptocurrencies as well too. We just hit nearly 110,000 on Bitcoin, and we haven't even seen the beginning with that. But this is how you protect yourself from a financial standpoint. I hope I covered the question.
The bond market is whispering something terrifying, and barely anyone's listening. Gregory Mannarino calls it the most important signal in the entire financial system. And he's right, because when bond auctions begin to fail, when even the U.S. government struggles to sell its own debt, that's not just a warning. That's a 4-alarm fire. Recently, both U.S. and Japanese bond markets have shown signs of deep distress. Poor demand, weak bids, rising yields. And what does that tell us? Investors are losing faith in the safest assets on Earth. This isn't about short-term volatility. This is about structural failure. Bonds are supposed to be the anchor of every major portfolio. When they break, everything else shakes. Pension funds, insurance companies, sovereign wealth funds, all of them are exposed. When bond values collapse, those institutions start scrambling for alternatives. And that scramble leads straight to precious metals, especially silver. Why silver over gold? Because when fear becomes desperation, people don't just want safety. They want upside. And silver, still massively undervalued relative to gold, offers just that. The gold-to-silver ratio is flashing one of its strongest signals in decades. Historically, when this ratio is this stretched, silver doesn't just outperform, it surges. And here's what makes this moment different. The bond market isn't just another financial indicator. It is the system. If it can't function, there is no economy, no lending, no liquidity, no confidence. That's why watching the bond market is like watching the pulse of the entire patient. And right now, that pulse is erratic, faint, unstable, which means the time to move into silver isn't when the headlines catch up. It's now, when the smart money is already making its move quietly before the panic becomes official.
We're in a dollar currency crisis now. The world is in a currency crisis. The central banks are in a race to the bottom. But this is an excellent question, and I'm glad this came up because I was thinking about this. We're going to see the dollar lose its reserve status. There's no doubt about it. Right now, we're about 25 years into the cycle. These cycles of the reserve currency switching hands here, there's a particular pattern that they follow. And the United States right now is following this particular pattern. I would say if I had to put a number on this, and I hate doing this, but I'll just throw it out here. I think we're right at the end stage of the dollar right now being moved away from, it's again every day that we're seeing this, the world is de-dollarizing. The world doesn't want our debt. No one wants our dollars. We don't even want our dollars here. Instead of acquiring gold, as the BRIC nations are right now, we're adding cryptocurrencies to our strategic reserves. That's not a confidence builder at all. If President Trump were not working for a central bank, which he is, of course, the Federal Reserve, all presidents are puppets of these central banks and the puppeteers that run them. He would be adding massive amounts of gold to our system right now, and the world would look upon the United States and the United States dollar as a safe haven. The United States dollar is losing its status as the reserve currency, and indeed, the world is turning its back on the dollar. We're seeing transactions being settled in all different currencies other than the dollar right now. But who's talking about that? Not even President Trump. Nobody. Because he knows what's going on. He realized this is a controlled demolition, that we're being led to the slaughter, and they want people on their knees begging for a new system. That's what this is really all about. That's why we're becoming the crypto capital of the world, the bridge into the new system, full tokenization. Everyone knows it. That's where we're going. But there's no doubt about it. We are in the end stage. I don't think we have much time left. I don't know, 5 years maybe less than that. It's going to take a crisis. And right now, look, man, they're building up to war. We have a crisis economy here in the United States. We can't function without a crisis. And the crisis does one thing. Why is that happening? Why do we have an economy that functions only on crisis to crisis to crisis? It's very simple, because each crisis demands more debt. It's an incredible thing. How people can't see this is beyond me.
All of these cracks, debt, currency, banks, real estate, corporate defaults, bonds, are converging into one unstoppable wave. And at the center of that wave is silver. Why? Because silver doesn't just hedge one risk. It hedges all of them. It thrives when the system loses credibility, when trust evaporates, when fiat currencies implode under their own weight. And right now, every single stress point in the global economy is aligning into the perfect setup for a silver explosion. Let's break it down. Debt markets are unraveling. Central banks are trapped in a cycle of destruction. Inflation is out of control. Banks are vulnerable to systemic runs. Real estate is frozen. Corporations are drowning in refinancing costs. In the bond market, the supposed safe haven, is flashing red alerts. In this environment, silver is more than a metal. It's a lifeboat. And it's not just speculation anymore. We've seen this pattern before. In 1980, silver surged nearly tenfold in under a year. In 2011, it soared more than fourfold as financial panic spread. But this time, the setup is even more explosive. Physical silver supply is shrinking. Industrial demand is surging, and the price is still suppressed, making it the most asymmetric bet in the financial world. When the dam breaks, silver won't rise gradually. It will detonate. First $50, then $100. And if the panic goes systemic, the scenario that Gregory Mannarino lays out, $1,000 silver, is no longer fantasy. It's math. This is the kind of moment investors dream about, but only if they're positioned before the chaos hits. Because when the storm comes, there won't be time to move. There won't be liquidity. There won't be brokers. There will only be those who prepared and those who didn't.
I'm the easiest guy on this freaking planet to find, man. Just Google me. My website, traderchurch.net, YouTube. I'm easy guy to find. So I hope people do follow your work. More important than mine, man. Look, I'm just a guy out here talking for quite a long time, just like you. But I want people to make up their own minds, man. Look, take this stuff in. It's important, of course. But I don't want to change anybody's mind, man. I want people to start to wake up a little bit. They've been lulled into some sense of distorted reality, and that's why we live in this dystopian society right now. It's not real, and it's going to get very real for people. So they better start thinking about what it means for them. And they're seeing it now. We got people here again who are scaling back on healthy food, opting for cheaper alternatives. They're poisoning themselves because they can't afford to live. This is exactly what people like you and I have been saying is going to happen. And this is called learned helplessness. I want people to look this up. This is a real thing, and they're thrusting it on us. Maybe it should be called acquired helplessness right now, because that's what they're thrusting people into, a state of affairs of dependency. I've been warning about this very thing for years and years and years, and it's a real phenomenon that is affecting more and more people, unfortunately. Man, look, man, I don't know. People need to take action, but I'll tell you something, dude, and you know what I'm going to say is 100% true. They got to reconnect with the source. They got to reconnect with the source, period, the end. I'm talking about God the Father, the creator of all things and of everything, unseen and unseen. They got to realign themselves there. Number one, then everything else will start to take shape for them. Their whole mind is going to open up. They listen to people talk like you and I, and they think that maybe we possess some kind of special knowledge or we're smarter than they are. There's no such, not at all. I am probably the least smart person that's listening to this entire thing. Meanwhile, I believe that I have a strong foundation in my connection with the force here, with the force, the source. Force could be the same thing. I don't know. Pick a name. There's millions of names for God the Father since the beginning of time. Jesus Christ called him what? Abba. I call him Jah. People call him Jesus Christ himself. I mean, we can go on and on with names. It's all the same. Okay, it's all the same. We're all connected. We're all children of the source or the force or Abba or Jah or Jesus Christ, however you want to talk about it. So realign yourself there first, and then everything else will fall into place for you.
When the system finally breaks, it won't come with a warning. It'll come with a blink. No access to your money, no trades, no safety nets. A complete financial freeze. Banks shut, brokerages offline, the digital world gone dark. And when that happens, only one thing will matter: what you physically own. In that moment, silver won't be just valuable. It'll be untouchable. No counterparty risk, no frozen screens, no third-party promises, just real metal in your hand with no expiration date. Gregory Mannarino isn't fear-mongering, he's connecting the dots. Every indicator is flashing red. The debt bubble is maxed out, central banks are boxed in, confidence is cracking. And every time in history that the system reached this level of stress, those holding silver didn't just survive, they thrived. Because when the dust clears and the fiat system resets, if it even survives, the only assets left standing will be the ones with intrinsic value. Silver doesn't just preserve wealth. In moments like this, it multiplies it. So the real question is simple. When the lights go out and the digital facade collapses, what will you be holding? If you're still in paper, still waiting on a recovery, still trusting the same system that got us here, you're betting against history. But if you're in silver, you're not just protected. You're positioned for the explosion, for the transfer of wealth, for the reset. If you found this discussion helpful, don't forget to subscribe for more. And remember, this isn't financial advice. Speak to a licensed professional before making any investment decisions.